This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell on Friday and were also down on the week as surging cases of the Omicron coronavirus variant raised fears that new restrictions may hit fuel demand. There are concerns about COVID that won't go away, and the perception that could weigh on demand is putting pressure on the market, said Bob Yager, Director of Energy Futures at Mizuho in New York. Brent crude futures settled down $1.50, or 2%, at $73.52 a barrel, while U.S. West Texas Intermediate, WTI, crude dropped $1.52, or 2.1%, to settle at $70.86 a barrel. Brent was down 2.6% on the week and WTI fell 1.3%.
Indian and Chinese oil buyers are snapping up Middle East crude after spot premiums for February loading cargoes slumped by more than half to 3-month lows on improved supplies to Asia. The drop in crude differentials, also seen in some European and African crudes, comes as forecasters such as OPEC predict a supply surplus in 2022. Still, views differ on the extent, and Goldman Sachs said on Friday average demand will still hit a record next year. Easing concerns about the impact of the new coronavirus variant Omicron on Asia's fuel demand are also supporting Asian refiners' margins, trade sources said.
Moving on to the top news in the energy sector.
Exports and transit of oil from Russia are planned at 56.05 million tons in the first quarter of 2022 versus 58.3 million tons in the fourth quarter of 2021, a quarterly export schedule seen by Reuters showed on Friday. Russia's plan for lower export loadings comes at a time of its planned gradual increase in the state's oil output next year under a recent OPEC Plus agreement. On a daily basis, Russia's own oil exports and the transit of crude from Kazakhstan, Azerbaijan and Turkmenistan via Russia's Transneft pipeline system will decline by 1.7% in the first quarter of 2022 compared to the fourth quarter of 2021, Reuters calculations showed.
Rising consumption in China, India and the United States could bring global coal-fired power demand to a new all-time high this year, undermining efforts to cut greenhouse gas emissions, the International Energy Agency, IEA, said on Friday. The IEA said global power generation from coal was expected to reach 10,350 terawatt-hours in 2021, up 9%, driven by a rapid economic recovery that has pushed up electricity demand much faster than low-carbon supplies can keep up. Overall coal demand, including for industries such as cement and steel, is expected to grow 6% this year. Though it will not exceed the record consumption levels of 2013 and 2014, it could hit a new all-time high next year, the IEA report said. Next, we have the top news in metal markets. Aluminium prices touched the highest in over 6 weeks on Friday after China's output of raw material alumina slumped last month, highlighting the risk of tight supply due to power shortages. 3-month aluminium on the London Metal Exchange surged as much as 3.1% to $2,749 a ton, the strongest since November 1, before paring gains to $2,733 by 1700 GMT, up 2.5%. China's output of alumina, which is smelted to make aluminium, fell in November by 4.5% year-on-year to its lowest in 18 months, official data showed on Friday.
China's embassy in Afghanistan warned its companies and citizens on Friday not to blindly visit the country to inspect mineral resources, after reports of foreigners being detained without exploration permits. Afghanistan's Ministry of Mines and Petroleum has extremely strict standards for issuing permits for prospecting for minerals, the embassy said, adding that companies and individuals that do this without a permit risk being detained. Currently there have been many incidents of foreign citizens being detained without permits in various parts of Afghanistan, it said in a statement on its website.
We will now look at the top news in the agricultural sector.
Russia's wheat export tax formula will have a higher multiplier if prices rise to $375 per t, and the multiplier will rise further if prices reach $400 per t, a proposal on the state website for laws and regulations showed on Friday. Moscow launched formula-based taxes for grain exports from June as part of measures the government hopes will help to stabilize domestic food inflation. The Agriculture Ministry determines the size of the duty on a weekly basis, based on price indicators reported by traders. Russia, the world's largest wheat exporter, has also said that the mechanism for its formula-based grain export tax would be fine-tuned to further protect the domestic market in case of sharp global price increases.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.